Hey, what's up, guys? Sam here. I'll be doing the free video for March 3rd, 2022. So, we're getting a little bit of a late start to this video, so I can see that the futures are trading down about 60 here. We did send out a short in the room today on the Qs, so let's LFG. But I want to bring you two ideas today. One long, and it's going to be a long-term long, and a short. And the short, I'm going to call it short the world. So let's dive into the long first. So the long that I think is worth your time here is natural gas, UNG. I don't have to bring you any fundamentals on that. You can probably piece that together yourself as to why this idea may work in a big way. But I do want to bring you the technicals. The narrative, you can piece together that on your own, and your narrative will be more entertaining to you than my narrative will be. But let me show you the technicals here. So there's one kind of common move in stocks where you'll get a test of the falling 200. You see the red line here? That's the 200. You see how it goes up, and the first test of the 200 it fails, and it fails all the way back down to the blue line, which is the 50, and then now it's attacking the 200 again. On the second test of the 200 is when it will go. And that's what I'm expecting here. So I'm expecting this next test of the 200 on nat gas to be the one that takes it through and up all the way above 20. By the end of the year, I'm looking at $30 on UNG. But in the short term, I'm looking for 20. You have the signal, the slingshot squeeze here, right? You see how it went negative and kind of slingshotting the other way. The trend oscillator stayed intact the whole time, and you have a triple buy signal underneath the weekly price. That is a very potent combination of signals, guys. Not only that, but your daily is becoming organized. And on the nat gas futures, you have a 3-day squeeze. So the trade that I like on this is the July 17s. I think you can do any call in the July series from 17 to 20. Originally, I was going to go with the 20s, but I did a little bit of work on it, and the 17s are actually more mispriced. So I want to go with the 17s here for July series on UNG, and I'm just going to hold those, and I'm going to continue to add to it. And the way that you add to it is you start small, maybe 5% of your allocation or 5% of your NLV, and then you add another 5% on a dip. But it has to go in your favor for you to add. You don't want to average into losers. You just want to average in as it goes in your favor so that you can have a large position by the time it's all said and done. So any call on the UNG, $17 to $20 calls, anywhere you decide, although I think the 17s are best for July is the trade. The second trade I want to show you, the VIX. Now, it helps to understand how the VIX correlates to things, right? Because when I show you the VIX, I'm not going to go out and buy the VIX. You can, but I'm not going to. The way that I'm trading this, or the way that, the way that I'm trading it, because I'm short now, is by index puts. So put debit spreads, I think, work, especially if they're out of the money, or just straight up puts. And I understand that the puts are expensive, but frankly, the signal says they get more expensive. So real quick here on VIX, if this chart goes higher, it takes everything with it. It'll take everything lower with it, right? So VIX up, stocks down, right? You see how VIX is starting to trend here? This is very uncommon. It's not common for VIX to start trending between the 8 and the 21, and you can see the trend quality on the trend oscillator. You see how both the green and the red are both above the midline, and the green comes down to the red, gives it a little kiss, and bounces off. That's extremely potent, guys. That's like an extremely powerful pattern in an instrument that doesn't trend. So in an instrument that doesn't trend, it's starting to show trend properties. You want to pay attention. Also, and we've been talking to you this about for some time, if you watch my videos on YouTube here, you have that high, you have that high, you have that high. You have this low, you have this low, you have this low, right? What's the pattern? Higher high, higher high, higher high. Higher low, higher low, higher low. The next high on VIX should take you into 40. The next low should be somewhere around 25. But I think you go to 40 first before you come down to 25. If you look at the weekly chart, this weekly squeeze is waiting to burst. It is a cauldron of squeeze, and it's ready to burst to the upside. So this makes me think that we're going to get to 40 on VIX, and if that is the case, then markets are going to drill. So I think the IWM, once it's all said and done, gets down to about 170. I'm looking for the SPX to get back down to about 3,900, and I'm looking for the NQ, the NASDAQ futures, to get down to about 10,500 by the time it's all said and done. So, of course, trading, much like life, is a game of timing, and timing is everything. But just kind of keep that in the back of your mind. If you continue to see these VIX signals build, you gotta stay nimble, and you gotta really avoid the temptation to try to swing trade a bear market long. Right at this point, I think all signs are correct that we are in a bear market in stocks, and you can have vicious rallies in bear markets, but as long as the structure doesn't change, it remains a bear market. And this VIX, the signal that I see here on VIX, is extremely dangerous, and it is right in our face. So be very careful out there. I think with the VIX signal, the easiest trade is to short the indexes. I wouldn't short the SPY, but I do like shorting the Qs. I am short the Qs. I do like shorting the IWM. And if you want to short any specific stock, I would just make sure it's tech or small caps. And that should cover you for that. If you want to balance out your book, I think UNG is a fantastic way to do it. Another way that I think is a really good way to do it is through the fertilizer names. MOS, Mosaic, CF, and NTR are fantastic plays on that. Another very clean play on the natural gas play that's even easier, in my opinion, than UNG is LNG. So I've given you some longs. For the longs, stay long commodities, stay long metals and grains, anything that's food related, energy related, stay long that stuff. Anything that's tech related, you need a damn good setup to justify being long. It's going to be easier to be short. All right, guys, that's my time. Hope this was helpful. See you for the next video. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.